Hello and welcome. You're watching IPO Corner. Today we are going to talk about a new IPO, Five-Star Business Finance. Five-Star Business Finance is a small business and mortgage loan provider focused on providing secured business loans to micro entrepreneurs and self-employed individuals who are largely ignored by the formal financial system. Five-Star is a South-based player with the top four southern states, Tamil Nadu, Andhra Pradesh, Telangana and Karnataka, cumulatively accounting to 93% of asset under management at the end of March 2022. The company has, however, started spreading its portfolio to other states, including Maharashtra, Madhya Pradesh, Chandigarh, and Uttar Pradesh. The lender has an extensive network of 311 branches as of June 30th, 2022, spread across approximately 150 districts, 8 states, and 1 union territory. Five-Star Business Finance IPO will open on November 9. The company has fixed a price band of rupees 450 to 474 per share, and the IPO is purely an offer for sale. SCI Investment and Matrix Partners Investment are offloading their stake, aggregating to 166.75 crore rupees and 719.41 crore rupees respectively. Matrix Partners India Investment will offer shares up to 12 crore rupees, and Northwest Venture will offer shares up to 361.45 crore rupees, and TPG Asia Group will also sell shares worth 700 crore rupees through this offer for sale. Of the total issue, 50% of the IPO size is reserved for qualified institutional buyers, while 15% is set aside for non-institutional investors, and the remaining 35% will be allocated to retail individual investors. Let's now talk about the key strategies that the company is working with. The company is working towards increasing penetration in existing markets through increasing branch staff numbers, increasing branch network in the existing geographies, and also diversifying to contiguous markets. The company will continue to focus on small business owners and self-employed individuals, primarily in the suburban and urban markets of India, as well as in rural markets, where CRISIL, the rating agency, expects faster growth in bank credit activity as financial awareness increases. Companies are working on optimizing borrowing costs to reduce operating expenses further and continue to expand and diversify lender base. The company is also planning to invest in technology and data analytics to build a scalable and efficient operating model to improve customer experience, increase productivity, and decrease costs. The focus will also be on enhancing risk management framework and enhance brand recall to attract new customers. Let's now talk about the key growth drivers. India has the world's second largest population and favorable demographics. Urbanization and increasing per capita GDP is also going to lend support to the companies like Five-Star. Retail and agriculture sector are expected to drive credit growth in fiscal 2023. Retail loan has the largest share in bank credit and will continue to form largest share at 32% in FY24 too. Trend in growth of bank credit of various segments looks positive. Greater credit penetration will increase proportion of new to credit customers. Rural economy is becoming structurally far more resilient. Rural India accounts to about half of the GDP, but only about 8% of total credit and 11% of total deposits. So this is a place where companies like Five-Star will play a very critical role, and that will lead to the growth of the company too. Retail sector grew at around 13% on year due to low interest rates for housing loans. So, and CRISIL, the research house, is expecting continued credit growth towards retail sector in fiscal 2023 at 13 to 15%. Let's now talk about the financials of the company. Over 95% of company's loan portfolio comprises loans from between 0.1 million to 1 million. That is from 1 lakh rupees to 10 lakh rupees in principal amount, with an average ticket size of 0.29 million, 0.27 million, 0.28 million, 0.26 million, and 0.31 million in the 3 months ended June 30th, 2022 and June 30th, 2021, and the financial year 22, 21, and 20 respectively. Total revenue from operations increased by 19.46% to 1,254 crores for the financial year 2022 from 1,049 crores for the financial year 2021. Interest income increased to 1,203.7 crores for the financial year 2022 from 1,014.8 crores for the financial year 2021. Profit for the year increased to 453 crore for the financial year 2022 from 359 crores for the financial year 2021. As of June 30th, 2022, company had total assets of 64,715.48 million rupees compared to 63,430.66 million rupees as of March 31st, 2022. For the June quarter, company reported revenue from operations of rupees 337.97 crore versus 300.52 crore rupees a year ago. Net profit for the quarter stood at rupees 139.43 crore versus rupees 101.57 crores a year ago. Gross term loans stood at rupees 5,296.54 crores from rupees 4,577.51 crores last year. Disbursements were also at rupees 568.43 crores versus 333.16 crores. Total borrowings were at rupees 2,520.32 crores from rupees 3,121.22 crores. Gross non-performing assets for fiscal 2022 stood at 1.1% from 1% a year ago. Net NPA fell to 0.7% from 0.8% last year. Let's now talk about the risk factors, because the risk factors are to be taken into consideration before investing in an IPO. For 5-star, the company requires substantial capital for business, and any disruption in source of capital could have an adverse effect on the business. Company's operations depend on its ability to raise both debt and equity from various external sources on suitable terms and in a timely manner. The risk of non-payment or default by any of the borrowers may adversely affect the business, results of operations, and financial condition. Company's inability to meet obligations under debt financing arrangements could adversely affect the business. Any deterioration in the performance of any pool of receivables securitized to banks and other institutions may adversely impact results of operations. So these were the risk factors for 5-star business finance IPO. Thank you for watching.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.